Thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. Good morning. And well, it seems to be a different world than what it was in Friday, right? We were talking to Peter McGuire about this. That what if the Fed comes in, and I thought it would come in around the Jackson Hole time to allay fears, as it has always done in the last 12, 18 months. It didn't take too long. They didn't wait for Jackson Hole, and therefore we had this up move in the US markets in Friday's trade, as a result of which I think the world seems to be a slightly happier place. So, first, the US markets and what they did in Friday. And much unlike what they did on Thursday, there was a bit of an up move. So, good, strong close to US. The futures are not looking all that bad, as a result of which most of Asia and the SGX Nifty seem to be doing rather well for themselves. If you see that whole bucket, there is not, I mean, at least as far as markets that matter to us, there is not a tinkering of red. Look at Asia or look at SGX Nifty. Either one that comes up on your screen, frankly, it won't matter. About a percent higher, 174 odd points is what this is saying. But if you look at it from the close, yeah, I think we're about these many points higher. So this should be a good start for sure in the session today. Could it could it crumble a bit later on? That's the question. Now, I'm not completely sure, and there are mixed views to that, and I'll present both. But let's wait and watch. And now, first, if you just look at what happened in Friday's trade, and I think it'll be important to look at some of the markers and what they do in today's trade. So, for example, the breadth was abysmal, right? 68 advances to 433 declines. A lot of positions got squared off because people, just by virtue of the fear, there's a BOFA note, BOFA Securities note, which said that they expect the Nifty to go to 15,000, some other things. As a result of which, I know a lot of people who, a large positional, but yeah, I mean, institutional positional investors, stroke traders, who cut their position even if they didn't need margin calls. That was the nature of the cuts that happened in Friday's trade. Could more of the same happen? Maybe now it won't, but will the scars go away? I don't know. Also, volatility crept up in Friday's trade, right? Actually, over the last 5 days, India VIX has shown a bit of an up move. In Friday's trade, I think it was northwards of 14, if I'm not wrong. So the last 5 days, it's climbed up quite a bit, India VIX. And typically, I mean, it was such a low level that yes, you would probably see at some bit of time an uptick. But from sub 12 and a half to 14 in a matter of 5 days, yeah, it did creep up a little bit. Let's see if volatility tends to pick up. Would we act? The VIX tends to pick up. Would we indeed have a pickup in volatility with some wild swings either direction over the course of the next few days or weeks? I think time will tell. Now, like I said, mixed views here. It's the Monday, and I typically trying to bring you one good chart from either CK Narayan's column or some other technical conversation or copy that I've read. I thought this was interesting, a chart from CK Narayan's column on BloombergQuint.com. And he's making two interesting points. If all of you can see this chart clearly, he's effectively saying that we're still some time away from the main support trend line of March 2020. And unless that gets taken out, you can't say that there will be a significant downtrend. But could there be volatility in the offing? I think the argument is yes. Two, again, the RSI, which has made a new high, and it's still some time away before it kind of indicates something otherwise. So for now, you have to give the benefit of doubt to the bulls. And I believe today's market action will indicate that people would want to give the benefit of doubt to the bulls. So let's wait and watch. Multiple things happening this week. It's no results, of course, but the most important event will be the Jackson Hole address by Jerome Powell. And I think come Friday, everybody will be watching for that. From an India perspective, I think today there's talk of how Nirmala Sitharaman or the finance ministry will go out, or probably Nirmala Sitharaman will announce the assets that we put on the block as a part of the government's asset monetization program over the next 4 years. It's an important event, least from a not necessarily from a equity markets perspective, because frankly, the markets have now known that the timings of all of these things are very erratic, but it's still an important development, and it's something that the market will be watching out for to get a sense of how prepared the government is to put some of the PSU assets on the block. What about stocks to watch? I think that's the key thing. Again, viewers, remember, I will watch out for a bounce back in metals, watch out for a bounce back in banking. So all of those will bounce back as a result of this. The question is, can they last? Can a sale, for example, after having beaten down to 118, get back all the way to 135? Difficult to say. I doubt. I mean, can some of the BFSI names and PSU banks in particular really shore up today? Motilal Oswal is a buy call on SBI with a target price of 600. Really doubt. Let's wait and watch though. Stocks to watch today specifically, which will have a movement. Aurobindo Pharma, principal one, got got whacked out of shape uh, after the acquisition announcement that they'd done of Cronus. Now they have cancelled the proposed deal to buy that stake in Cronus Pharma Specialities. Now, here's the CLSA view, and then give you the other view as well. CLSA says that while this action may allay concerns over capital allocation, the earnings outlook remains benign in the medium term as the company is going through a large investment phase. The key near-term trigger is value unlocking from the ongoing demerger of the injectable portfolio into a separate entity. We retain our outperform rating. So they retained the outperform rating, and yes, at this price, you would see Aurobindo Pharma spike up in trade today, maybe a meaningful spike up. But here's the concern, right, viewers, that if indeed they were so convinced that their acquisition was such a good one, why is the market reaction forcing them to do otherwise? The other good way to look at it is, which is what a lot of very smart people tell me, that the market is the best teacher. And if the market is telling you something, and if the management is taking that action, then you've got to view that constructively. I believe in the latter, that if you're indeed listening to what the market is saying and not being arrogant about your own move, it's actually a good thing. But I don't know if there is a return to glory of sorts unless the move that CLSA spoke about, the demerger of the injectable portfolio, happens. Let's wait and watch. Zaris Kadila, or Kadila Healthcare is the other one. They've gotten the COVID vaccine, Zycovid D, which has got an approval for emergency use authorization for DCGI for COVID. So I think that is a very good thing. And therefore, the stock should react positively. I was looking at a few notes, frankly. Citi has a sell. They are saying that this is great, but I mean, they still have a sell rating with the target price of 490. Morgan Stanley equal weight rating with the target price of 664. CLSA upgrades to buy with the target price of 650. They are saying that the recent stock correction offers attractive entry point and that there are multiple long-term drivers. So I've given you all the three views. Kadila should react positively post that. I mean, if it opens a big gap up, figure out if you want to buy or not. Brokerages have a mixed view here. It's interesting. I doubt it's a stock moving event for Infosys, but they have been summoned to explain the bug in the new tax portal, and therefore Infosys remains a stock in focus. The story is there on multiple platforms, also on Bloomberg Quint. You might want to tune in and see that. Adani Enterprises is interesting simply because SEBI has placed the IPO on hold amidst the probe. Now, usually this could be viewed as a negative. It has been put in abeyance for the time being. It's happened to multiple companies, therefore not be that big a negative. But the interesting thing, viewers, is that if you look at the last 400, 500, 600 point rally on the Nifty, you don't see the Adani Group stocks participating. They have been lackluster at best. They have failed to participate in an up move, and when the down move comes about, they quickly go down. There are also this probe on why the in the power business, the equipment import tax, why should it be struck down? I think there's some probe that is being restarted, or at least there is an appeal as to why the probe shouldn't happen there too. Yeah, it's got a few issues up its sleeve, Adani Group, I must say, and I don't know if this will be viewed constructively. Certainly won't be viewed constructively. How big a negative? I don't know. So the point I'm trying to make is that usually, when temporary setbacks happen, you buy into that. Is this one of those instances for Adani Enterprises? Maybe. Wait and watch. Indostar Capital Finance, the OFS opens for retail investors today, so could be an interesting stock to monitor. A bit of damage happened in Friday, but let's wait and watch what happens today. Some of the stocks in focus: Aavas Financiers, HDFC Mutual Fund, and GIC have bought small stakes, but they've bought about 0.5% and 0.98%. So that's one stock in focus. Aditya Birla Fashion and Retail, very small quantities, but the promoter IGH Holdings have bought about 1.25 lakh shares between August 13 and 16. Ramakrishna Forgings, promoter of the portfolio, bought about tiny tune 6,500 shares. Shilpa Medicare is the interesting one on a bulk deal basis. Cohesion MK Best Ideas. I presume this is a Madhukela venture. Has bought about 7 lakh shares, about a percent at 520 per share. So after having been beaten down quite a bit, it went down all the way to 520 where these guys bought. It closed at about 566. It's fallen all the way from 650, by the way. And keep in mind the results were very poor for Shilpa Medicare. And it seems that quarter two also will be poor. So do your own due diligence. Don't just go out and buy a stock because somebody else has bought it. But yeah, this is an interesting one. Could be in action today. Some stocks which move out of the short-term ASM framework, actually into ASM framework, is FIM, and out of ASM framework is Nureka, JNFC, and PTC India. Nureka, interesting small cap name, got beaten down about 25% from highs of 2000 to almost 1500. Could be interesting moves out of the ASM. And FIM, which has been in news for all the right reasons, of course, moves into short-term ASM framework. Could be a temporary disruption for that. And lastly, if you just look at the pattern of buying in Friday's session, pharma and FMCG were top draw. Look at these. Look at these. Like the delivery percentages. Delivery-based buying seen in Ipca, Shilpa, Sequent, HUL, Nestle, Britannia. So FMCG and pharma were right up there on a big bounce today. They will definitely not participate in the initial bounce, though pharma might because of Cadila and Aurobindo. I'm saying FMCG will not. Question is, can they then make a move later on if the market cools off a little bit? That's a question you got to ask yourself. So all of these are interesting points to ponder. A lot would depend on how the US markets do today as well for the continuation of the rally tomorrow, because frankly, right now it seems we are tied completely at the hip to what the global markets are doing. So let's wait and watch what they do today. But for now, the going doesn't seem to be bad. Asia, remember viewers, is in the green. VIX has bounced but could cool off a little bit today. And dollar index is steady at that 93 half. Crude has corrected quite a bit, so upstream remains under pressure, but that's net positive for India. Let's wait and watch. And I think Goldman Sachs and BofA believe the lost decade for emerging markets could come back. Well, could India participate? But that's too long-term a view. Let's see what happens today. Stay safe. If you're stepping out, please stay masked up. Watch out for the bounce back in metals and banking. Watch out for pharma, particularly because of Aurobindo and Cadila. And do watch out for some of those trading tweaks that have happened, and maybe some of those stocks could react. Thanks so much for tuning in today.